Recently, the Australian Treasurer Jim Chalmers sanctioned banks to not account for student HECS debt when calculating the serviceability of their mortgage. In a nutshell, what that means is they're actually incentivizing the demand for more property by letting more people buy that probably shouldn't be buying. So HECS debt, or university debt, college debt, needs to be paid back, but you do only have to pay it back once you've got a job. So if you don't have a job, you don't pay the interest on that debt. However, most people with HECS debt do have jobs, but what that means is when they're going for a loan at the bank is not taking the HECS debt under consideration when it comes to serviceability. So they're actually selling mortgages that will put these students in more financial difficulty, which is a really dumb decision. And the reason why they're doing that is so they can keep GDP steady to win the next election. It's completely political.